Hello traders, Gary Wagner here. Just about 12 noon in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. This is the daily report for gold and silver, our weekend review, and this was a week we will all remember. Recall, last Friday we had a devastating sell-off in the market, and then on Tuesday that emergency announcement by the Fed of an interest rate cut drove the market higher, $42. The rest of the days were relatively quiet up until today. You will see that when I show you a 15-minute chart, because we saw some extreme action occur in half-hour blocks both at the beginning as well as the conclusion of today's trading. Tremendous price swings. The range today was $50. Let's take a look at our price board, then to our studies, and we'll talk about our current trade. As you can see, gold did finish higher on the day, up $6.20 at $16.7420. But the high today was $16.9280, and it occurred in an instant, a blink of an eye. Also the sell-off that occurred in the morning. We'll talk about that when we pull up our charts. Platinum gained 4.44%, a total of $38, back over 900, 9041. Palladium lost a little bit, about 1/3% at 2,462 and change. And finally, silver lost approximately 1/3% at 1734, and that's with a lower Dow Jones Industrial Average. I do want to start with the dollar because the dollar was down 0.75% and is really responsible for the increase we saw in gold. But take a look at this. The dollar has been falling consistently over the last 2 weeks. We have seen it hit this top almost at 100 and now hit a low of about 95.50. That is about a 4.5% to 5% drop from this top here to this current low today. And that is going to continue if we see bonds do what they have done this week, which is the lowest yield on record. Traders, on today's show, I want to look at gold through 3 different charts, a daily, a weekly, and a very short term. This is the week that was. You can see that although we had a little bit higher of a high, they're about equal highs. However, that was taken out today when the market went to 1292. However, take a look at how long this green candle is. It was by far a week in which we saw gold move significantly higher. But I think the most interesting chart that we can look at today has to be a short-term chart. Each candlestick represents roughly 15 minutes in time. The markets here open at about 3:30, so that would be this candle here. This would be 8:30 in New York and where the market opened. So you could see it opened, traded lower on, and then spiked up all the way to 1688, and then in essence traded sideways, I believe, until the jobs report came out, because the jobs numbers were strong. And take a look at this dip. The market went from roughly 1685 down to a low of 1643, and it did that in a 15-minute time increment. That's an extremely strong and fast move. Now, for the remainder or majority of the day, we had a steady and methodical rise up until we had that big spike. This spike represents the highest trading point this year. You can see this line at 91, and that is representing the former high. So you can see that we had definitely a higher high, but it then came down really hard. In fact, went negative for approximately a couple of ticks, and then it settled down to close up $6.20 on the day. Now, of course, we went long at 1668 yesterday. We put our stop below yesterday's low, and I'll show you that on a daily chart. But my recommendation is going to be for the weekend, we maintain our stop where it is, and we maintain our current position. Traders, lastly, we are looking at a daily chart. And as you can see, although we closed up $6.20 on the day, in terms of the open to the close, it's almost a doji in that it's not that far apart. It's a very, very small green candle, but it is doji-esque. I would call it a doji. And so it tells us that while we still have resistance at this area, The fundamentals that have been driving the market have done one thing for sure, and that's absolutely increased the volatility as expressed last Friday, as expressed on Tuesday, and expressed yesterday. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review, but we will monitor the market as it opens in Australia on Monday, which will be Sunday for the mainland as well as here. Have a great weekend. Bye-bye.